traders, welcome back to my YouTube channel. This is your boy Ulizani, Mr. Simple Analysis, the simplest analysis you can ever watch on YouTube. So guys, in today's video, just going to be analyzing. We're back with the simplest analysis you can ever watch. So I'm going to analyze two pairs, which is Gbpusd, and then I'm going to analyze Usdcad, and then I'm going to show you like DXY, and then explain a few things that you can look out for. So as you know, the rule is that then on the weekly time frame we get to spot the trend of the market. As you know, the bigger the time frame, the lesser it lies, the lesser the lies. And then here we're just pointing out our areas where the market come and do it and reverse each and every time. So as you can see here, I'm marking out my areas, and on a bigger time frame we come to see the trend of the market, what type of trend is it giving us. So as you can see, the trend of the market here is that, let me mark out my lowest low, but let me just mark it. Okay, the trend of the market is, as you can see now, it has changed the as you can see, this is our high, lower high, higher high, lower high, higher high, lower high. That means we need to do what, to push up. That means what we're expecting some buys. So let's dive to smaller time frames and see what we can spot. And then here we got our resisting, our supporting trend line. Here I'm putting my supporting trend line, and then my resisting trend line. This is my resisting trend line, this is my supporting trend line, and we have seen that we are on we are on an uptrend. This is a rising channel. As you can see, this is a rising channel. So let's go to the smaller time frame, H4 time frame. Let me clone this one and then put it right here. So what I'm expecting right now on euro on GBP USD is that GBP USD, because let me just show you, because we were pushed towards the upside creating a high, and then push towards the downside creating a low, push towards the upside and push towards the downside, and push towards the upside, push towards the downside, push towards the upside, push towards the downside. So we are expecting another push, and then a correction, higher highs and lower highs, higher highs, lower highs, higher highs, lower highs. So we gotta have a lower high in order for us to enter the market, in order for us to enter some buys. Because remember guys, we enter a trade after a correction. We don't enter a trade on move. This is an impulse move. An impulse move is a push towards the upside. So we gotta have a correction, or a bigger correction, then we push towards the upside. So another thing that just added my confirmation of my confluences is that this is my first and then second touch, and then I'm expecting a third touch. But remember, if you are not scalping, if you are not swing trading, if you're not swing trading, remember you gotta take profits at the nearest resistance or support. But if you are scalping, that means you are just going to hold your trade, move your stop loss from entry, and then expect another correction and push towards the upside. That means we are going to enter right here, stop loss a bit below right here after a correction. Remember, you don't enter a trade on an impulse move, you enter a trade after a correction. Each and every time you gotta remember that before you enter a trade. So here we can just add our support. and then here we can just enter. Let's go to the daily time frame and see something. Yeah, this is our support, because yeah, it's been supporting from here, from there, and there. As you can see, that means if you're scalp trading, we gotta wait for a correction, enter a trade on an impulse move. You just gotta have a trading plan, follow your rules, read it out on a day-to-day basis. So on the 1 hour time frame, let's see. Yeah, even on a 1 hour time frame, we're still waiting for what? For proper correction. And then we go to what? To USD card. To USD card. Here's my USD card. So you know the rule on the weekly time frame. The weekly time frame helps us to like identify the trend of the market. Yeah, at the market price right here, we have a resistance, because you see touch. Yeah, we have a mid zone, because we do not know now whether it's a support or a resistance. But let's just say mid zone, we have our lower here, and then here we have our sensitive area, and then we got what? Another sensitive area right there. Let's zoom out so you can see the market here. This is a bit of a consolidation. This is a consolidation at a bigger time frame, and then it dropped. Here we have our equal highs, which is a double top. This is a double top, and then we push towards the upside, creating our first what? Lower high, and creating our lower low, and then push again, creating our lower low, and then here we have our lower high. This is a weak rejection, as you can see, a weak rejection. That means you see that the things that we are expecting, we might expect some sells, but we gotta have more than just one confluence or confirmation. Our supporting trend line and our resisting trend line. This is my resisting trend line, this is my supporting trend line. So let me zoom up. Yeah, here's what we have: a trends and trends, structure inside of structure, or pattern inside of pattern, whatsoever you can call it. So here we have a zone. That's why the market, when it comes here, it rejected with the wick and then pushed towards the downside. So what to expect from here? I'm spotting another structure here. Is it a structure? Is a pattern inside a pattern? Structure inside a structure. So what to expect from here is that analyzing is so good, guys. I have spotted something again. I think we are forming a head and shoulder in the network. Yeah, guys, I think we have spotted a head and shoulder right there. That's a pattern of a head and shoulder. This is a pattern of a head and shoulder. From here, the network is just yeah, this is a pattern of a head and shoulder. The shoulder, this is a head. Yeah, let me do it. This is a head. This is the shoulder, this is the head, and then we're expecting another shoulder, and then pushing towards the downside, coming to this other block right here. Yeah, so to expect is that the market can first play around before pushing towards the downside. The market can play a bit and then push. Let me use a bar pattern. What can happen? It can come and test our touch. This is what can happen. It can come test our third touch and then pushing towards the downside. That means we have a head and shoulder, we have a structure inside a structure, and we have seen that yeah, we might be expecting some sales right from here, but on Wednesday, I think tomorrow we have NFP, so that can make our trade to be invalidated. But let's go to DXY. DXY. I just want to show you something. Yeah. So on DXY now. Connection here. Yeah, so on DXY I spotted this last week. I think on Thursday, yeah, before Friday NFP, and then as you can see, guys, if you're trading with the trend of the market, there is slight chances of you going on the wrong direction. And now what to expect is that DXY can come and do it and create. Remember, we have broken out our support, so DXY can come and create a correction. After a correction, we push towards the downside, going to our support, because this has now become our resistance, because we are below. This is a mid zone, and mid zone changes over time. As you can see, I spotted this was a good trade, guys, as you can see. So now we have to do what? We have to correct. After correcting, that means we have to place some sell trade right over there, place sell positions, push towards the downside like that. So you just gotta wait for manipulation, because it can come and create a wick, a bit, and do what, and then continue with some sell trade. So patience is the key, guys. Patience is the key. You just gotta have patience when you come to the market. And guys, don't forget to like, hit the subscribe button, share with your friend. This is what I have for you today. Holy Sunny, Mr. Simple Analysis, and we are out, guys.